top of those names, Tesla and Ford also both out after the bell. Both are, in fact, higher after the close. For more, let's get to Phil LeBeau, who's doing double duty on both Ford and Tesla. Phil.
And Melissa, let's start first off with Tesla. That earnings call, by the way, coming up in about an hour or so. When you look at Tesla, it comes down to this. Could they have turned a profit in the third quarter? Yes, they could, and they did. $2.90 a share, way above what everybody else was expecting out there. The consensus was for a loss of 19 cents a share. So that's one of the takeaways when you look at Tesla. Also, the liquidity goes from $2.2 billion in cash on hand up to $3 billion. And the Model 3 production plans, they have been reaffirmed. So as you take a look at shares of Tesla, and it's had a nice move after hours, let's see what happens when the conference call starts out. And let's see what the tone and the attitude is coming from Elon Musk on that conference call, which starts at 6:30. Quickly on Ford, that conference call has just begun. And when you look at Ford, it's all about North America continuing to be the profitable division that keeps the entire company floating. The rest of the markets, international, they're a mess. Big losses there. They have, however, reaffirmed their full year guidance. But what's interesting on this call, Melissa, and we're going to be back with some sound from Jim Hackett in a little bit. What do they say about their restructuring plans? There was nothing at all in the earnings release about what they plan to say, when they plan to give more details. And if there are not a lot of details given on this conference call, don't be surprised if the tenor of questions from analysts gets a little snarky, because they were that way last quarter.
All right. Phil, thank you. Phil LeBeau in Chicago for us, breaking down the numbers from both Ford and Tesla. Again, both stocks are trading sharply higher in the after-hour session. I don't know where we want to start, Guy. They were big quarters for both the companies.
Well, I think that you start with Ford. I mean, so revenue, third quarter revenue miss. I don't know if that's a big deal or not. I think the guide for the full year is pretty good, though. So now you have to ask yourself, does valuation finally start to matter? Stock's up 5.5%. I think bulls will say, you know what, maybe that's the line that's in. Maybe we're starting to see a turnaround. I think Adam Jonas from Morgan Stanley might say something else. I'm inclined to fade the move in Ford, but maybe this is, in fact, the bottom.
I mean, if the problem was that we hadn't heard from Jim Hackett what the restructuring plan or what the turnaround plan was going to be, and then all of a sudden we have a better than expected quarter in a raise, that solves the problem? I mean, all of a sudden there's clarity?
It doesn't solve the problem, but again, people, for maybe it's the right reason, maybe it's not. We're obviously now past peak SARs in autos, but people have considered the automakers guilty until proven innocent in terms of their EPS. And that's for the last 3 years, effectively. So Ford on a trailing 12 months is about 5.7 times earnings. That's crazy cheap with a 7% dividend yield. So at some point, their earnings do matter, but we are still concerned about structural issues with the company, and I think the market needs to know.
On your buy list, Ford, now at this quarter?
No, I mean, I'm long GM. That's not worked, obviously, for a long time. But, you know, Ford did say they dropped their 2020 target tonight. That's not, I mean, maybe people thought they'd never get there anyway, right? Yeah. So the stock's still up. I'd much rather have GM. It's not in the disarray that Ford is. And it's ridiculously cheap as well. I think with maybe a higher dividend. I'm not quite sure at this price, but that doesn't even really matter.
Is the dividend safe in Ford?
For GM, yeah.
I just interviewed an analyst on Ford, and he said the dividend is not safe.
It's not safe.
Is not safe.
Right.
That's the opinion of one person.
That's the problem.
But that's out there, and that's
right.
a problem.
It's been out there. It's been a rumor, and when you look back on Ford and you look back to the next support level being the 08 lows that are cut in half from here, it's pretty scary. But the other side of me is the trader type that when you look at a stock that's been so beaten up, down 33%, pretty much everything is out there. You might be able to get a laggard pop in the name.
For Tesla, we're seeing a pop in the after-hour session of more than 12%. We saw a pop yesterday,
and the day
12.5%. Right? No, yeah.
Is this a 3-day move of like 30? I don't know. Maybe I was thinking the after hours yesterday.
Got to give Andrew Left a lot. I mean, we kill him when he's wrong, but you got to give him credit when he's right. And he came out with a pretty positive note. And here's the stock now, $322. So what's my instinct in this? I said it a couple weeks ago. Sometimes you get yourself backwards on a name. This is a name I've gotten backwards on. But if I were just look at this, I'm saying this move to the upside is setting up for the capital raise. And then how will the stock trade? If, in fact, they announce that, how will it trade post that comment? That's what I would be watching.
Isn't this move, though, saying no capital raise?
I don't know.
I mean, I think this move and the free cash flow that you just heard about is telling you we're good.
Maybe not so
we're good. Now, the cynics might say, hey, you know, amazing how suddenly we found a lot of free cash flow in this machine that didn't exist before at a time when we're going to have to roll a lot of debt. It's gotten very expensive for us on our credit. Anyway, that's the cynic.
Let's talk more about that because Tesla earnings wouldn't be complete without our fast money friend Gene Munster, founder of Loup Ventures. He is here on set, and let's get right to that point because that was a real highlight. Cash flow from operating activities, $1.4 billion, and this is mainly due to significantly improved volumes and profitability of Model 3. It wasn't because of various changes in various working capital items. There weren't any shell games or pulling forward. What does that say about the need for a capital raise in your view?
I think it's unlikely that they're going to have to raise money for the fundamentals, the operations of the business over the next year. Now, maybe as they progress for China and build this third gigafactory, but that's a whole separate thing. And you got to give Tesla credit. Despite all the distractions, they delivered on what you just said, this better profitability of Model 3. They talked about in their letter about 30% improvement in the efficiencies of building Model 3. That's a key element to sustain profitability, which is the critical question here.
They've gotten scale, in other words. They reduced the labor hours needed to produce the Model 3 by 30% in the quarter, which would indicate that the ramp is intact, which would indicate what about margins in your view? Because that seemed to be another sort of thing that Wall Street was hung up on. What will happen with the margins here?
So you can never mail anything in. Nothing's ever is certain in the world of Tesla, but this is the most encouraging results just because the opportunity around the sustainability of profitability. Not only that, that's one piece, the manufacturing piece, but there's also a second piece to it, which is demand. And I think one of the, within the letter, they talked about the average trade-in. So this is people who are purchasing Model 3s. Their previous car was purchased new at $35,000, and they're buying a $55,000 car. That is a powerful statement about how this car is appealing. They don't have this mass market price yet, but appealing to people willing to stretch for that. So when you think about sustained profitability, there are two parts of the equation, demand and the manufacturing piece, and they seem to be making a sizable step forward on that.
On the demand part of it, of the 455,000 net reservations reported in August 2017, only 20%, less than 20%, actually canceled. So people are actually sticking by the $1,000 that they put in initially back in 2017.
Yeah, my question to Gene, and you can't go back in time, I get it. But prior to funding secured, this was a $360 stock coming off a pretty great quarter. The stock was trading higher, all on its own. So I'll ask you this question. If you back out funding secured, given this quarter, should we be significantly higher? Could we see a stock that might actually be 420 based on this quarter today?
If Elon didn't mess it up over the last 3 months, the stock would be above 400 today. And I think that's based on, you think about the opportunity, a $60, $70 billion market cap relative to the trajectory that they're on. Now, I'm not saying that that's where the stock's going to go in the near term, but I think this company has a much more powerful vision, this concept of accelerating the globe's adoption of renewable energy, which has largely been lost over the last 3 months based on his behavior. And so I definitely think the stock would be higher if not for that.
But even in terms of the short term, Gene, I mean, if you sort of extrapolate this quarter into the end of the year, let's just say that they can continue to ramp at this rate or somewhere near that. They continue the cash flow to be somewhere around where it was in the third quarter. And then you throw on top of that the potential catalyst of having to name a new chairman and independent directors, and that has to happen within 45 days of that SEC settlement. So it's got to happen in the next month or so. I mean, where do you see the stock going?
I think that it's going to move higher in the near term. I think that there's still going to be this bear case that this demand is propped up by the tax credits that are at $7,500 going to go to $3,700. So my point, Melissa, is that there's still going to be a bear bull debate, but I expect when they report their December quarter to see another step up in terms of the stock.
Yeah.
So, Gene, the demand has obviously been proven by these numbers, at least for this size, you know, for this cycle. And you've got arguably a jacked up or a specced up Model 3 with a slightly higher ASP, that once you get through that demand, I mean, I'm going to play cynic, as you expect I might, and say, I don't know that the demand is there. I get the fact that there's a lot of people right now in this range that want to buy a very cool car and reach, because we knew those people were there already. I mean, is that fair?
I see it a little bit different. I think at the end of the day, you talk about 400,000 reservations and 80% of them keeping that. That's unprecedented in the automotive world. So I think that there's data that would suggest that the demand is in fact real. And at the end of the day, it comes down to this. Is the car substantially better than anything else that's out there? And even though I don't own one, I think that people who purchase them would suggest that it is, and that will continue to stoke demand.
Grade the quarter, Gene.
I reluctantly give it an A. And the reason why I reluctantly give an A,
because the call hasn't happened yet.
Well, the call hasn't happened. Yeah, you don't want to get in front of that. Also, I just tend to try to shy away from great inflation. But you need to look at this in the context of a Tesla quarter. This is, in fact, a company that did what they said and a little bit more despite a massive distraction. So it deserves an A.
Let me ask you a little bit more broadly while we have you in terms of the tech sell-off that we've seen. You follow very closely a lot of the names that have got hit the hardest. Are there any that you would say, you know what, that's worth a buy?
I think Tesla's a buy here. I think Apple's a buy. They haven't been hit in particular as hard. I think Amazon, if you have a longer-term view, I still think you should veer clear of Facebook and Twitter, for example. Those, I think there's more structural things that are headwinds for them.
And a Netflix?
I'm still somewhat neutral on that. I think given the valuation, what Apple's coming out with, I still think they've got some headwinds.
All right, Gene, great to see you. Thank you so much.
You.
Gene Munster of Loup Ventures. How would you trade Tesla?
So I think Gene said something very telling to Guy's question. He said, until Elon messed it up. And I think that's the risk in the name now. So you have these pops in a stock that's heavily shorted, but you get Elon one sentence away or an event away from screwing it up to guys that are bullish, cult-like people who follow the stock, and I think it's good for 50 to 75 to the downside.
Yeah.
Would the stock go up if they did a capital raise?
I would say
Would
not.
it still go higher as it has in the past, Guy? What do
Well,
you
these guys said they're probably right. Maybe given this quarter, they don't need it. I mean, they are trying to build a $2 billion in a plant in China, but maybe that is a year or so out. Maybe by then they won't need a raise. They pulled a rabbit out of the hat. I think you would agree. These numbers sort of came from nowhere. So my question to you and what Steve addressed.
I actually disagree. I think that this is kind of what they were setting up for. There's, in terms of reaching this higher profitability. They've been setting this up. No one believed them because of Elon's behavior, but they've been telling this was
fair enough.